Welcome everyone to this opening session of OMFIF's DMI Symposium 2021. Over the next 2 days, we'll chew over many important fundamental principles which need resolving to facilitate the introduction of central bank digital currency, both retail and wholesale. With a couple of notable exceptions, many central banks are still at the working group stage. We're kicking off though with one of the notable exceptions to that. And we'll move on to one of the others, in fact, at 1:45 London time today, in the form of the People's Bank of China. First, though, we're hearing from the Central Bank of the Bahamas, which with its sand dollar is already well past the implementation stage, so might have useful lessons for others. It's my great pleasure to welcome then on this inaugural session, John Roll, who is the Governor of the Central Bank of the Bahamas. John was Financial Secretary before the Finance Ministry, and has also spent time at the IMF's Executive Board. Thanks very much indeed for joining us, John. Diving straight in then, you launched the Bahamas Sand Dollar last October as the world's first live retail CBDC. What were the motivations for launching it, and what implementation challenges have you seen so far?
For the Bahamas, this was the end part of an overall modernization of our payment systems. So we had a payment system modernization initiative, which we got started around about 2012 or thereabouts. And we put a lot of pieces into place, including an emphasis on admitting new providers into the space to accelerate the introduction of digital products and services. As a part of that, the focus is on promoting financial inclusion outcomes in a country where you're basically an archipelagic setup with remote communities and islands separated from the capital. What we wanted to do was to ensure that as we introduce new financial services providers and as we push digital transition in terms of financial services, that those providers operated in an interoperable environment. And from that point of view, identifying central bank digital currency as the means of providing the interoperability was an easy solution for the Bahamas, particularly since we want to make certain that there's a transmission channel for financial services so that wherever persons reside in the Bahamas, they can use that medium to access even other banking products and services. But certainly the financial inclusion motivation is there, as well as making certain that for these new providers of services, they have an interoperable platform on which to provide those services. Now, in terms of the challenges, I would say that so far they are not the kinds of challenges that we would complain about. I think it's partly the result of also developing and tweaking product features as you go. But one of the things that we were very clear on in the Bahamas and going the route of providing a retail currency was that we needed to allow the financial institutions to be the distributor, the end distributors of the currency. So it means we have to manage that process with new financial services providers who are coming into the space. So they're also in a product development mode. So there's some amount of patience that we've exercised in terms of allowing them to do the integration, to go through the cybersecurity and other assessments so that they can plug into the infrastructure. But that has been very important. The other thing is that I think because of the pandemic, we miss the human interaction, which we think is so important by introducing something on this scale, in the sense that when we thought about having a pilot first, a part of the reason for that was also to interact with the communities and to also impart knowledge about digital financial services, how to operate safely in the space and those types of issues.
John, just to explore a couple of basic issues with potentially far-reaching consequences, you mentioned financial inclusion as a key motivator. Presumably, you're aiming at people without commercial bank accounts. Tell me a little bit about that. Which people are you reaching, and what platform are you using instead if they don't have bank accounts, so that they have access to a means to pay where the government wants them to have it?
So the vision for the CBDC infrastructure is that this platform will link up with deposit accounts on the endpoint, and all of our financial institutions would be able to use this infrastructure for settlement and payments. But from a financial inclusion point of view, what is, I think, interesting about the Bahamas is that access to banking or not having access to banking isn't quite the distinction between whether one is included or excluded. It's just that being in the rural communities, in many cases, there are severe limitations on how banks are able to provide and deliver the services. For us, really, we are most intent on providing the digital channel for the provision of these services. And that we think will be addressed in this product development. In addition, there would be those individuals who are not yet in the banking system. In the Bahamas, relatively speaking, we estimate between 80 to 90% of the population has access to banking services on some level or the others. So if you're just looking at the aggregate, it doesn't look as alarming, but understand that when you start to go into the rural communities, that experience differs. And the ease of establishing the relationship is less. And therefore, this intervention, providing the digital platform, accelerating the provision of the digital platform, is what is most important for us at this stage.
We'll come back to lots of key issues that other jurisdictions are still trying to solve, as you know, including issues on anonymity and privacy. But before we do that, I wanted to ask a little bit about the pace of adoption. How you encourage people to take up the Sandal initiative, and what do you expect the trajectory of take up to be in the future?
Well, if I can go back to a point that I made early, we focus on allowing the financial institutions to develop to the point where they can provide more mass distribution of their product and services. And I think we are at that point. And in getting to this point, our assessment is that the interest and the demand for central bank digital currency in the Bahamas is stronger than we are supplying up to this point. But we are very early in the adoption process. One of the things that we've done to make that process easy is, in focusing at the financial sector level, we addressed at least 3 years out a lot of the customer due diligence and anti-money laundering standards, transitioning to a more risk-based approach so that it is easier for persons to establish financial relationships. And having done that, it has meant that in the digital financial products world, the relationship can be established digitally, remotely. And to us, that is one of the most important aspects of enabling and encouraging adoption. In addition, it has been necessary to have that level of commitment from the government sector, because the government is typically the largest single originator of retail payments. And we've gotten that commitment. And so the government right now is in the process of preparing a lot of its systems to accept digital payments on the CBDC platform. And they're going to use this opportunity also in some of the remote communities of the Bahamas, which are more cash intensive, to try and transition almost wholesale to digital. So that is also going to be an opportunity to push the transformation and adoption of the instrument.
You mentioned KYC, John. I've heard major banks suggest that what they really provide isn't infrastructure and technology, it is KYC services because their customers trust them to hold that information. How are you dealing with KYC in the instances of people who perhaps don't have a bank account?
Well, that was something we addressed about 3 years ago. And we incorporated it into financial products at the entry level, meaning that on a low risk basis, financial institutions can scale down the amount of KYC that they do for onboarding, which reduces, in the Bahamas case, to proof of identification for persons who want to get into basic deposit facilities. And in instances where they do not have photo IDs, the system directs them how they can still go about establishing relationships. In the payment world, there is an even lower level, which we also anticipate, which is that once we establish the threshold in terms of the amount of stored value payments that individuals can have, they do not even need to provide the photo ID to get started. Although I must say, for all of the product providers that I've seen in the Bahamian space, they've all been onboarding customers using some level of photo identification. But we anticipate that there will be individuals who will have minimal amount of photo IDs, such as a passport or a government issued photo ID. In those cases, the system accommodates them in terms of giving them basic entry to the payments products.
Okay, could you talk us through typically the sets of counterparties? So which institutions might be performing this KYC, and then what is their relationship then with you at the central bank to distribute CBDC? Talk us through practically some of the providers in those steps.
These are all central bank licensed financial institutions. Therefore, they have already demonstrated to us on receiving their license, and they have to demonstrate on a continuing basis that they have the systems that meet the AML and other financial integrity safeguards that are needed for financial transactions. And there, we stress financial transactions monitoring so that we can get beyond the hurdle of persons being admitted into financial products and services space. So those institutions have these satisfactory systems. In addition, we're making a direct intervention in the digital space and developing an electronic KYC infrastructure that will be accessible to all of our financial services providers that are licensed and supervised by the central bank. So that's a system that is in the very advanced stages of development. And it anticipates the fact that for smaller financial institutions, some of the infrastructure could be costly to develop. So having a shared infrastructure is where we're headed and where we will be in very short order. In addition, the government has set out in the near term some targets around developing digital systems for national identification, which we expect will further improve the KYC infrastructure. But for our immediate purposes, we felt that it's important, specific to the financial services sector, to develop some of that infrastructure even ahead of what the government would eventually provide.
But listening to you also, it's clear that that you at the central bank would like a multiplicity of partners to operate or to channel central bank digital currency once you've licensed them, rather than work with a small handful of platforms that may form a monopoly or a duopoly over these kinds of services.
Mm-hmm. So all of our commercial banks, all of our credit unions, and all of our institutions, what I would term as money services firms, which typically would be involved in either cross-border money transmission for remittances, or they're new into the space and maybe they're just starting in the domestic realm. So that core of institutions will all have access to provide the KYC and the onboarding for digital wallets. The banking sector has generally indicated that they will be moving into the space. For them, earlier the move is a bit slower than some of the new product providers, and I think that is partly explained by the fact that it's no easy task to suddenly introduce new digital products in a complex banking environment where you have to deal with all of the security and other elements. But we anticipate that all of our banks will also be in this space on some level. And to the extent that we've also pushed to integrate with the automated clearinghouse.
Good. As one of the few live retail CBDC projects already in train, John, Sand-Dollar is a great source of practical feedback and data for the other central banks considering the same thing, as we've just been hearing. I want to explore some of the other classic worries that we hear elsewhere in the theoretical discussions on this area, starting with the risk of financial disintermediation, which of course has financial stability implications. So to what extent are you protecting the commercial banking sector from complete disintermediation in theory through other payment systems and platforms that could disperse CBDC?
Well, I think the theoretical discussions have been useful, but we have to start from the point that we're developing the digital equivalent of cash. We're not developing the digital equivalent of deposits, which already exist.
Yep.
And so from that point of view, we've been clear to focus on the payments utility of CBDC. In our regulations and in our design, we focus on limiting mass accumulation of holdings of CBDC. So if it's purely for transactional purposes, there are less restrictions on transactions volume, but there are certainly caps on how much CBDC individuals can hold in their mobile wallet. So we've done that purposely. In addition, we've moved away from any idea that there will be interest paid on mobile money holdings in this form. So that's also a way of avoiding some of the similarities with deposits. We've also addressed the issue of disintermediation in terms of rapid shifts in funds from, say, deposits into the mobile wallets, in the sense that we've included safeguards in our regulations, in our draft regulations, so that if we detect any of those types of shifts, we would be able to intervene in specific ways to slow down the shifts and to buy the time that is necessary to stabilize the system. I think that is very important. But in terms of financial stability risk from rapid flight of deposits from one institution to the next, that is certainly not an issue that's unique to CBDC. I think that is an issue that comes out of the fact that money now moves at the speed of light.
Can you change the limits you've just talked about dynamically? So we've heard elsewhere the idea that if there were happened to be another financial crisis and conceivably a run on deposits, you might reduce the limit of CBDC that could be held to prevent people extracting money from the banking sector. So are you able to control those dynamically from a technological point of view?
No, and I must say that I think some of these issues are going to be unique to the financial system in question. When we dig into the system in the Bahamas, the general impression is still that people want to have the bulk of their monies in the banks. Even some of the appeal of having mobile wallets and the like are no different from the appeal of having the leather wallet and going to the ATM and putting some money in the wallet and then using it. So it gives you, I guess, a degree of separation from your store of savings. So a part of the appeal and ease of encouraging CBDC adoption is providing individuals with that link to their traditional deposits so that they can store their excesses there. The substitution that we are promoting really is between the physical cash and the digital cash. And I think that from that point of view, the issues are not as concerning insofar as the direction that we're trying to promote in the Bahamas.
Do you have a date by which you would abolish physical cash in prospect?
I do not realistically see physical cash as being completely gone from the scene anytime soon. I think where we're headed is really perhaps increased substitution to the digital options, but there are no signs to suggest that physical cash is completely out.
One other area I wanted to explore in terms of the issues that commonly crop up in other jurisdictions is the one of anonymity and privacy. OMFIF has done quite a lot of work on this area, surveyed different attitudes in different regions of the world, and the responses vary unsurprisingly by culture. Nevertheless, there are pronounced worries in key jurisdictions about privacy and anonymity that physical cash provides. How has the sand dollar got around those issues?
Well, in our public education and outreach, we've made it very clear. Privacy is promoted and advanced, but anonymity is not something that we are encouraging. And therefore, this is a system that has to be fully compatible with the standards for financial integrity, anti-money laundering, and related standards. And we've been very clear on that. At the same time, we see this as an opportunity to strengthen privacy and data protection.
Another issue that a very practical issue that's come up as well, which I know that that you in the Bahamas have looked at, is the issue of backup and system redundancy. I think in your case, you're subject at times to severe weather events, which may or may not knock out power and mobile networks and so forth, which of course would disbar people from access potentially to cash in the case of digital money. How have you got around those issues?
It's a work in progress. I think central bankers around the world are studying this issue, and we hear a lot of talk about offline availability. For us, at least, we're able to address very rapidly recoverability, in the sense that if recoverability depends on getting a physical branch of a bank or an ATM back and running and cash stocked into the ATM, that is an issue that falls away if it only reduces to reestablishing wireless communications. And so we see that as a very early part of the process of getting back online. The one thing I think that we all think about in the CBDC environment, which is perhaps less of an issue in the distributed ledger world, is the amount of nodes that might exist in terms of backup and redundancies. And I think some of those challenges will be resolved according to how central banks globally cooperate. Because if you take the global network of central banks and other financial institutions, or even in a regional basis, we believe that there will be opportunities for cooperation in terms of, building out the levels of redundancies that might be needed in the payment space.
And we'll be exploring interoperability at length with all of the other participants. So that's a very good point. You tell us a bit more, John, about wholesale applications. We don't necessarily need the same technology for retail cash as wholesale payments, but people are expecting them to operate in common. Tell us a little bit about that. You already mentioned earlier the infrastructure that you're building in the Bahamas.
Well, I think the advantage for us is that we automatically include or embrace wholesale potential by having the retail element, and the way we can address that in the Bahamas would be how we deal with the limits. On the wholesale side, though, we are going to have to develop those use cases directly with the banks and the other systemic players in the financial system, because then it becomes an issue of the kinds of settlement needs that they have. And some of the discussions that have been going on around wholesale use of CBDC, the attraction is really around being able to do the settlements outside of the traditional hours that we typically operate for the legacy payment system. So we would need to develop needs around off hours settlements for interbank and other types of settlements. In the Bahamas, I would say that we're going to feel that pressure probably at a later point than in some of the other financial systems, to the extent that our system is still not as complex at the wholesale level. And therefore, it is almost as if we can get away much longer with the 9 to 5 hours of operation that we typically see.
John, thank you very much. That's all we've got time for in this session. I'm very grateful that you talked to us today. It's very interesting to hear real examples of CBDC from its direct implementation in the Bahamas with the Sand Dollar. So thank you very much for talking us through those issues. We greatly appreciate it and hope you can hang around for some of the other sessions. We look very much forward to following the progress of your very interesting initiative. So thank you very much, John, for being with us today.
Thank you very much. And like I say, I think these are the opportunities that allow us to learn so much more and identify the issues that need to be resolved. It's a pleasure.
Thank you very much.